E-mini S&Ps nudged lower today, closing at just above 5,900, so down from yesterday's close, however, saw a big move week over week. Now, early in the session, we saw trade and tariff headlines push equities down to their session lows. However, declining inflation via PCE data, as well as higher sentiment, helped take equities off their lows and actually push them positive for part of the session. Again, but seeing equities come off at the end of the day and close slightly lower, just north of 5,900. Now, week over week, we did see a big move higher. After seeing that big move on Monday, we saw equities hold those gains from Monday and close higher about 1.5% week over week. So despite the fact that we saw a slight decline today, it was a big move higher week over week. Now, what does this all mean for volatility? Well, looking at this morning's data, we saw those trade and tariff headlines push equities lower. Volatility was higher. However, as they reversed off those lows, we saw volatility coming off. So volatility ended the day slightly lower, and taking a step back made a big move lower. As we saw equities move higher week over week, we saw volatility move lower week over week as well. Lastly, let's talk about what we have next week. Next week, we kick off with the Fed chair on Monday. He'll be giving his 2 cents about the economy and about policy. Then it all becomes about jobs. We'll talk about jobless claims, talk about ADP, we talk about JOLTS. It'll all culminate in Friday's non-farm payroll number. And then, of course, we'll continue to get earnings, and we'll be looking at some discount retailers, including Five Below and Dollar General.